Bitcoin is sitting at 92,500 or so, and people are tense on both sides. Fear is still high. Where is it going to go? Let's unpack it all with Alex Miller right now.
Let's go.
Well, good morning, everyone. Dave Weisberger here, subbing in for Scott once again. Tomorrow, probably the last time you'll have to hear me for a while, well, at least until Macro Monday, but I'll be back in my normal spot. Joined by Alex Miller to help unpack what's going on with Bitcoin. There's lots of confusion out there. Alex, what do you think is going on?
It goes up, it goes down. I don't know. I think I think it's a reflection of just the general instability that everyone is feeling across the board right now, right? We're seeing very similar movements across a lot of different equity markets. It's the holidays. I think, one of the endless debates, I think, over the last year in particular, and especially the last 6 months, has been, is the 4-year cycle dead, or is it going to repeat itself? And obviously, December and turn of the year has always been a weird time for people, right? Like, I think one of the favorite ones I've seen is it goes up right after Thanksgiving because everyone goes to the, Thanksgiving table and tells their family about Bitcoin, and then people go and buy it. And then I feel like there's always something weird that happens around Christmas time. As someone who helps run a crypto ecosystem, every year around the Christmas holiday, we have, I don't know, some kind of surge in usage or chaos. We had a whole weird thing with our testnet last year and stuff. And so this is always just a weird time of the year. As more people have I think some excess time sitting around the computer and talking to people on the internet, made all the more so by nobody knows what inflation numbers are. Nobody knows what the next job numbers are going to be. And nobody knows when the Fed's going to, if they're going to go full on printing next year, if they're not. And I just think that's showing up here. I think that's just what's showing up.
Yeah, I mean, it is interesting. I think two things, and one you're incredibly well positioned to talk about. So you'll know which one of the two. The first one is, it always feels, and it's very strange this time, I'm not going to lie, it always feels like Bitcoin bottoms coincide with renewed calls of calling Bitcoin tulip bulbs, or it's a Ponzi scheme, or things are wasting, basic FUD of some sort, whether it's about China or the environment, or these days about MicroStrategy. That's an old favorite, but a goodie, and that one's come back. There's Satoshi FUD out there. It's kind of, and when I say that, I mean people talking about it being the CIA and they're getting ready to dump the market so that the U.S. could buy it cheap. I mean,
sure,
all sorts of crazy stuff. And the perma skeptics, the ones who have been wrong since $100, the Steve Hankeys, the Peter Schiffs, the other ones that just have gotten more and more histrionic with daily posts. You always see that. At the same time, however, building and the network seems stronger than ever. Right. Yeah. I checked this morning back up to 100 and, 115 exahashes. Am I getting the numbers right, or am I off by a bit? And which is, just for those who follow along at home, is about more than 10x where we were when FTX collapsed. The last time we had extreme fear ratings like this for a sustained period of time. So, the notion that that Bitcoin is closer to dying now, and people talking about an inevitable bear market because of a 4-year cycle narrative, actually, I think it's playing out the opposite. But I'm curious, from a builder, which is what you are. I mean, I think the building community seems, other than a not versus core, what spam versus no spam, which I think we should get into, and I'm sure you have an opinion on, seems stronger than ever. So, am I crazy?
No. Hey, absolutely not. So I'd say building on Bitcoin's again also in a little bit of a weird and transitional place right now. But I'd say if you specifically as you talk about data storage and programming on it, people are still trying to figure out, I think, what's next there, and it's just a ton of R&D work going into it right now. There hasn't been kind of a huge major development in it like there was in kind of since ordinals in March of 2023, February of 2023. There's obviously like BitVM, and a lot of this stuff keeps advancing along. But the story of the last year has absolutely been integration into the core financial system more than direct building on top of Bitcoin. Like that's what the market's been really interested in. And obviously with Trump coming into office and the resurgence and the insane amount of institutional adoption that we've seen, like that is where the activity has been. But to that point, like that makes it all the more insane that you would think it's going anywhere anytime soon. I think that is part of what's helping break kind of the traditional 4-year cycle that we've seen on it. Again, you're going to continue to see up and down. You're going to continue to see it be more volatile than, say like the straight S&P or even the NASDAQ. But yeah, it's really not going anywhere on it. And the idea that it is crazy. You made the point. Yeah, the hash rate is way up even over the last year, let alone like 3 years ago. I have a miner that I usually run over the winter to heat my garage using like the excess solar power. Traditionally, I've run it in a pool because I at least it's like a little 96 terahash thing. It's made a few bucks a day doing that. I think I'm actually going to swap and just go to solo mining now because, hash power has gone up so much, again, even in the last 12 months, that there's not really a great point to me running in a pool. I'd maybe make like $1 a day or $1.50 a day worth of Bitcoin on it. So I'd rather go into the lottery ticket mode, and like it'd be pretty sweet if I hit a block running solo on there. Actually, I think an individual miner about 6 or 8 weeks ago, a couple months ago, did have one and hit an individual block, and like 3 months after they started mining. So that was actually pretty lucky for them. But yeah, like
you're running it. Basically, you're running it off of excess power, and the machine's paid for. So from your perspective,
it's all free money to me on it. But I think that's a very interesting thing, which is you saw some Bitcoin miners pivot or look at pivoting into AI. I think it was CoreWeave was even trying to buy Core Scientific, I want to say, or someone else, and that deal actually fell apart. I think it's actually quite impressive given how well suited a lot of Bitcoin mining operations were, given their heat and power density, for pivoting into AI operations haven't. I think that's a very interesting sign that there's a lot of people who've made investment here who still think there's a lot of legs, on Bitcoin. So the idea that the people who've put their money where their mouth on it is clearly don't think that there's something to go. You mentioned MicroStrategy as well. I think it's another interesting case where I think I have said for a very long time, I don't like MicroStrategy accumulating the amount of Bitcoin that they have. I don't think it's good that multiple percentage points of Bitcoin are held by a single actor. I don't like the overcomplex financialization of it. I get why it's not like as problematic as taking straight loans to do it. But there's a reason that they announced this big USD reserve fund now, is that people were very, very reasonably getting worried about, like, are they going to have to start selling and dumping to satisfy the, hundreds of millions of dollars, like a month, certainly a year, that they have to pay in dividends out to people. They realized that was going to be a problem. And so they just sold a bunch of more common stock to basically be able to do it, diluting their shareholders out in the press, which great. I'm glad that they're not going to be selling on the market, but I think there's a reason you saw Bitcoin start to turn around and come back, kind of bottom out right before that announcement and start to move back up now. Is a lot of people who are rightfully worried about what happens to the market if MicroStrategy starts dumping.
Now, it's funny because in March, look, I hold MicroStrategy for the long term in a couple of like retirement accounts and whatnot for a reason. It's a way of playing a bet, which frankly, the bet's going to be right, and there is upside there, and I'll explain in a heartbeat. But in March, when he gave the earnings presentation, I posted, and I got a lot of heat for it, about the fact that it's path dependent, meaning that I use the word theta, which is an option term for time decay. Mm-hmm. And I said that in a sideways market, MicroStrategy will massively underperform. Why? Because they're paying all this interest, and their hurdle rate is, if Bitcoin doesn't go up 10%, you're going to lose money being in MicroStrategy, because it means that their loans are outperforming their assets. And so that's a bad thing. And that's okay. I mean, if you know that going in, it's fine. And that is exactly what's happened over the last year. MicroStrategy's return profile is going to look like a long option strategy, where if Bitcoin doubles, MicroStrategy is going to triple or so, or should. If Bitcoin goes down, it's going to go down more, and if it stays flat, it's going to continue to slide because of that time decay. And it's really as simple as that. And people need to understand what they're buying. The kicker with MicroStrategy, and the only reason, and by the way, I loathe all the other digital asset treasuries, because they don't have this. The kicker is, if one wanted to try to get 100,000 or more Bitcoin on their balance sheet to be able to do Bitcoin-backed loans and do Bitcoin-backed banking, once Bitcoin can be treated as collateral in the system, you would pay a lot more money than MicroStrategy has it on their cost basis, right? Forget whether it's 74. I mean, we're talking 200 if you want to try to accumulate that sort of stash right now, unless you found an OG willing to sell it to you, right? And it really is that simple. And so when the Basel rules change right now, if just to put this in perspective, you may not even know this. If you are Galaxy Digital, and someone comes to you and says, I want to buy $1 billion worth of Bitcoin long, will you sell me a swap? And I'll take your credit, and we'll figure out who's going to custody the Bitcoin, but I don't want to have it on my balance sheet. I don't want to worry about that. I just want to have the economic returns over the next 4 years. So you say, okay, great. And then someone else says, I want to short Bitcoin over the next 4 years. And so you have a swap on both sides. Well, that's $1 billion on both sides. Right now, they have to reserve $2 billion in capital to have on that trade, even though their risk is limited to counterparty risk, because they have a long and a short. If it were in the S&P, they'd probably only need 100 to 200 million in capital. Now, in Bitcoin, they'll probably need 200 to 400 million because of the volatility. But the reality is that difference is whether or not banks, or under Basel rules, can actually declare it as capital that is usable as collateral. Right now, it is not. And when that rule changes, MicroStrategy has the ability to turn themselves into a Bitcoin bank. And in fact, JP Morgan even said it yesterday. And MicroStrategy even said that they see that as a funding source in terms of the ability to do it. So at that point, now you have to start comparing it to banks. And banks trade between 0.8, i.e. a discount, to 1.8, i.e. a significant premium to their book value. And MicroStrategy's book value is obviously Bitcoin. So I don't hate MicroStrategy, what they're trying to do. They're trying to do it as a first mover. And I certainly don't hate what Jack Mallers is trying to do, if you take him at his word, of building operating businesses that can generate Bitcoin. But Bitcoin treasury companies that are just purely buying Bitcoin as an access vehicle, I mean, I thought that was going to end. I thought it was going to take a year or 2 years longer than it did. But I think that's kind of dead now. And that's a good thing for the market.
Yeah, I mean, there has to be a reason that people actually want to do the thing. And again, it's very hard to beat if you're just buying and holding Bitcoin, you're not going to be able to do it in the size, and therefore beat MicroStrategy at the game. They're always going to be more efficient in it, especially because they've already got all the leveraged ETFs that are giving them the additional volatility that other traders want. You're just never going to do it a little bit better than they were going to be able to. I think you've seen some of the other plays that are for some of the other assets. But again, even the appeal of some of those go down as the SEC approves staking on ETFs, right? So that was at least one advantage to doing it. But I think the other thing you're going to see is people, I don't think you're going to see the strategy on treasury companies go away entirely. But I think one of the things that the market's going to really want to see, and maybe this is just a bias because it's something that I want to see out of them, is how are you de-risking the fact that this is a company run by people who can fuck this up, basically, right? Because the upside to an ETF is it's just the asset, right? Yeah, sure, I pay 10, 20 basis points.
By the way, that is a great point, and people need to understand that. And we've seen exactly this. I mean, I lost some money in Nakamoto thinking when it got below its MNAV that would be a good buy, and it kept falling. And with all due respect to David Bailey, the market lost faith in him.
Yeah. Yeah, and that's the thing, is that, like, it's a lot more sure of a thing to pay 10 or 20 basis points on an ETF. Maybe it's 25, but there's discounts on some of it. So, 10, 20, 25 basis points on the ETF, and know exactly what it is each year you're paying, versus like, well, how much money are these people going to spend on CEO salaries and compliance, and like, what if they get hacked? There's a huge amount of like open-ended risk there that has to get priced in. And again, to your point, if you think it's just going to keep going up and they're going to keep raising and like be able to, get $2 a market cap for $1 a Bitcoin, then fine, you'll keep doing it. But as soon as the market starts going sideways and they can't do that anymore, you're just left with the asset plus a bunch of additional risk.
Right. And that's exactly what's happened. I mean, it's risk and cost. I mean, overhead, right? It's like there's a big difference between it. I mean, treasury companies that are doing things uniquely like staking or and things that they can do at scale, on certain assets, I understand that.
Yep.
But the truth is I've said this all along. Treasury companies will go away and you'll be left with companies. And a lot of companies are going to say, I have excess cash on my balance sheet. I have a choice. Do I want to buy back my stock at this valuation? Or am I going to put it in treasuries and underperform the market? Or am I going to put it in a potentially productive asset? And the answer to that is going to be they're going to try to outperform, and people will start using Bitcoin on balance sheets for a very specific reason, as momentum builds back into the market. And, I'm a very simple guy, Alex. I just look at the price to hash rate, and I'm happy to buy at a price to hash rate at basically all-time discounts, because every single time in the history of Bitcoin it is corrected. And if you think Bitcoin's going to drop to 50, down to 10 or whatever some people are talking about, I mean, you're basically saying it's going to fail. Meanwhile, the smart money is investing. And I'm not, when I say the smart money, I'm not only talking about miners, like individual economic actors. I'm talking about nation states, right? Mm-hmm. I mean, we're talking about a geopolitical arms race, and it's there. And with AI, people totally don't appreciate that the component of the cost of a miner, and actually you know this better than whatever, what percentage of the cost of mining Bitcoin is power and data center space, basically, vis-a-vis the actual mining equipment themselves these days?
Depends where in your depreciation cycle you are. I mean, yeah, it's a huge percentage of it is marginal cost on electricity and things. And this is one of the things, is there's actually a bunch of miners who bought their mining hardware like 3 years ago and are coming up on refresh cycles and having to do that. And there's a bunch of new machines that have come out. Again, like me running an old, S19 96 terahash machine is not even what it was a year ago, let alone what the power was 2 years ago. There's been a huge shift in that right now. And so, yeah, absolutely. It's absolutely driving a shift. And depending on where you are in your cost of power really, really affects how much you want to do it. But the price of Bitcoin is still high enough that it's clearly worth people investing in, because we're only seeing the hashing power go up rather than down.
But think about it from the AI perspective. So, look, ASICs are not for AI, but the data center power and the data center platform is. And data centers, space of the data center is not nearly as important as the power and cooling, right? And people don't understand, especially in a lot of these remote data centers, the land space, the land cost is really, really small. So if you're building a data center to power AI, and it costs you X. But the problem with AI data centers are, other than the training, everything else is demand response, meaning there's significant peaks, and it's not an even use. And Bitcoin can be turned on, Bitcoin mining can be turned on and off. So you can get
this is why
90% discounts, 80% discounts on power by running it alongside on an intermittent.
I mean, this is part of how Texas has built so much solar, is that Bitcoin miners can go there and use it as load shedding, because you can ramp your demand profile on Bitcoin mining in 15 seconds,
right?
Even faster potentially. Like, you can just turn them off and there's no downside to that. You can definitely load shed AI, but not in the same way. You can't do it as fast. And you can do it much easier with training runs. It's interesting with training runs. You want to run it at 100%, but you can control the demand profile so you can ramp it down. With inference profiles, you're dependent on what the other people are doing, but you're not running at 100%.
Right, which means having some Bitcoin alongside it in one of these data centers. So, there's been all this talk yesterday, which actually makes a lot of sense, using small nuclear reactor technologies, the kinds of stuff that in the previous generations powered submarines and aircraft carriers, right? But now all of a sudden you build data centers with that stuff. Now that's expensive, and that'll be expensive for AI, but it's a lot less expensive when it's not being fully utilized, if you can use it for Bitcoin as well.
Yes. Well, and I think the desire for SMRs also comes down to a whole other just reality of what it takes to get internet connected to the grid, especially here, right? Like there's this whole funny thing right now where nobody actually knows how much power demand there is. Because right now, like the timeline to get interconnected to the grid is anywhere, depending on where you are, from 18 months to 7 years, right? If you're trying to get into PJM, which is out on the East Coast, basically around Virginia, that whole area, it's like a 6, 7, 8 year wait right now. But part of the reason there's that wait is you have a bunch of these people with phantom applications for interconnect because there's like a multi-year wait. And so, right, it just like keeps exacerbating and stuff. And so they may not actually have to. So like I said, it all comes down to nobody knows exactly what it is right now. And so the idea of like, oh my God, I could just like buy a nuclear reactor and just like drop a gigawatt of power on the site is like really appealing to people, which is why you've seen, I don't know how many hundreds of millions of dollars of investment into SMR companies in the last 12 months. Also the fact that, thanks to the Trump administration's difference in view on nuclear power from the Biden administration's, people actually think like it might happen this time, and they're actually like rushing to do it. So it's a lot of it is about just reestablishing control over your business and your timelines and de-risking things,
right?
Reducing your dependence on outside.
But from a macro investing point of view, if you think that a modern grid can be recalibrated for double the amount of power demand, which more or less is not far off of what is. I mean, it's some of the estimates are much more than double. Can be reconfigured without a stabilizing technology like Bitcoin running alongside of it. I think that you're smoking something, because I really think that's the way that you're going to be able to do it without wholesale massive infrastructure projects and even if you did a wholesale massive infrastructure project, the time it would take. So, being able to people just don't understand the harmonics inside of stabilizing grids. I mean, you made the point about Bitcoin and said 15 seconds, like, well, that's massively important. Well, what people don't understand is when a grid fails, starting it up again is a non-trivial task.
It is incredibly complicated. Yeah, and the grid is incredibly complex with the number of interconnections between different things, the way all of this works, the economics behind it. And that's just the running of the day-to-day of the grid. That doesn't even start to factor in what it takes to upgrade it, the legal situations. And again, the funny thing for me is it's not just about AI. It is simply that, you'll see these charts posted over the internet all the time. But there is a simple truth, which is there is no such thing as a, rich, energy poor society, right? All rich societies have a lot of energy, and the cheaper the energy is, the better, right? Also, the cheaper the clean energy is, the better.
Right. And by the way, the cheaper and most accessible the energy.
Well, I think those go hand in hand with each other.
Yes, you and I do, but a lot of people don't understand that this is a multivariate problem, and so you're trying to evaluate assets. You need to evaluate the assets that are contributory versus extractive. Bitcoin is undeniably a contributory asset, despite and yet. But if you listen to only the New York Times or Stephen Hanke or Peter Schiff, they would say it's extractive. They would say, well, Bitcoin takes all this electricity, small countries, and this is like, well, yeah, but as it does so, it allows you to build grids in a much more efficient.
I think there's a very interesting dynamic, which is Bitcoin doesn't have politics here, right? Bitcoin, just like almost any other financial transaction, cares only about the input and the output, right? Which means if you make it really easy to build a ton of green power and you lower the cost of it, right? Then Bitcoin miners will buy that power cheap and they will sign the offtake agreements, right? Again, as we've seen happen in Texas, where they've made it really easy to do that. If you don't do that and you keep the cost of renewable power cheap or high, then Bitcoin miners will go and they will buy old coal plants and reactivate them and burn coal power to do it, because that's the cheaper cost of power for it. They will do just like anybody else, just like the same thing you will do. If you get the cost of electric cars cheaper, people will go buy electric cars and do that. If you don't, they will buy ICE cars and they will use those, right? Everyone does this. They will go to the cheapest source of power that they can find. Obviously, depending on who it is, there's a little bit around the margins there, but fundamentally, people will use the cheapest power. So if you make it really easy for people to build green power, Bitcoin mining will fund the next generation of green power build out, the same way that AI is like driving a move back to nuclear. But if you don't let them do that, yeah, they will use dirty ass fucking power to make the next buck. And like I always come back to, this is why I like capitalism, is it capitalizes on what I think is just innate human nature to try and make money, whereas communism, socialism tries to deny it. Right. It tries to battle against it instead of pointing it in a productive direction.
I always phrase it very simply. Capitalism, which is, we do not have capitalism in America today. We have cronyism, but capitalism is about letting human incentives achieve what human incentives will achieve, allowed to do so. And communism, socialism is let's deny human incentives and try to force our way around them, which is why there is no such thing as a socialist or communist country that doesn't have a totalitarian government. And in fact, when people say, well, Sweden or Norway, it's like, yeah, they both, all the Scandinavian countries went hard back in the direction of capitalism and freer markets, because
those countries have always been heavily capitalist. They had a very good, strong social safety net, in part because they had massive natural resources to do it with.
That's right. No, I understand the dynamic. We could have that conversation too, but I don't think our audience really cares about it. But the point,
I feel like there's not a lot of communists watching The Wolf of Wall Street yet.
That's probably true. But look, the SMR point, which stands for those, in case you don't know, what small modular reactors. I consider that the ultimate green energy. I know there's a waste issue, but it's a solved technological problem.
Not.
It's a solved technological problem. The fact that the green movement was in large part founded because of hysteria about nuclear energy has set back the green movement.
Unbelievably so.
Decades of setback. I mean, it's actually one of the most craziest things that the green movement, which started, you're talking about Greenpeace, started with Save the Whales, is actively campaigning to ignore studies and ignore data that says that wind power off the coast of North America is killing the North American right whale. It's one of the craziest things that drives me nuts. But the fact is that AI is going to demand power. Bitcoin allows technologies like small modular reactors and wind and solar to be more economically viable and help build out a better grid, which we now know we're going to need. And whether it's electric cars or AI, there's no doubt we need a bigger grid. And I don't see any path to doing so without Bitcoin side by side, which is why a lot of people pushed Trump to make that EO that people have ignored since he signed it, which is that Bitcoin is a strategic asset. It's strategic, not just in the financial sense. And I think that's the point. And I know you understand this, but I don't think that's in the price. I think it's in the hash rate. I think you could see what's going on, but I don't think it's in the price. Do you?
No, I mean, I think Bitcoin's price is still highly volatile. I think it's in the long term, it's certainly not priced in on it. You were talking about, like, does it go to 50? Does obviously, I say obviously, I don't want to jinx it. It doesn't go down to 10 or something, but yeah, it's going to go up. It's going to go down. It's going to do its freaking thing. But again, I think the level of integration and adoption, there's a lot of people with a lot of incentives for why they've done that. And at the end of the day, people want to make money, so they're going to do that. But I think there's good principle reasons to like it. And then there's just good practical ones. And I do really think that the energy build out and transition there is a huge, huge positive use case for it. And it's just a matter of people needing to channel it and take more advantage of it.
So we have 5 minutes left. What are you up to these days? And is there anything in particular that, that you think that people want to hear about?
Yeah, I'm building on Bitcoin. Yeah. So for those of you who don't know, I help run the Stacks projects. We're a layer 2 for Bitcoin. We just actually a couple of weeks ago rolled out our dual stacking, as we call it, where you basically can earn return yield on your Bitcoin by holding Bitcoin and a lesser ratio of STX on it. It's created from the stacks mining process. Again, I think this goes into a major theme right now, which is people want to earn yield and return on their Bitcoin, right? You have a bunch of Bitcoin, you don't want to have to sell it in order to like live, or you also just want to grow it and accrue more of it. And we've seen massive demand on it. You see every single Bitcoin DAT talking about how they're going to earn yield on it, but no one really has very good ways to do it right now when you lack the programmability and you lack kind of the inherent staking mechanisms that you see on like ETH or Solana and things. And so that's what we're working on doing, is trying to just make Bitcoin more programmable, more usable by folks. And there's a ton more that we have coming up soon that's going to actually, again, just continue to improve kind of the security and privacy profile on Bitcoin, while still just making it more usable for people. And I think, Bitcoin is this, it's established itself, obviously, years ago we were talking about some people, not those of us who knew, we're talking about the flipping and the idea that ETH would overtake Bitcoin. And I think any idea of that happening at this point is pretty well dead and buried. It's just pretty clear Bitcoin's going to be around for the long run.
So look, Alex, all boomers like me ask the question when someone says the word yield, where does yield come from? And I always laugh, and I go back to one of the only big services that Sam Bankman-Fried actually did, other than hosting a kick-ass conference in the Bahamas, was
Never got to go.
We went, thankfully. He caused a lot more pain net to me and the company that I co-founded and our clients than anything else. But he did expose a lot of the hypocrisy about yield in crypto with the whole magic box thing with Matt Levine. So I always ask, so when yield to exist, there has to be demand for someone to borrow. Now there is demand for people to borrow Bitcoin for a variety of purposes.
Well, I'll call it, no, there has to be an economically valuable transaction taking place.
That's what I mean. Right. Yeah. So So could you just, like I'm a 5-year-old, tell me how Stacks helps take that economically viable transaction, where the demand comes from, and where the yield is.
Stacks mining on Stacks works using a system called proof of transfer. And if you think about proof of work mining, right, proof of work's pretty simple. You bid electricity to win Bitcoin, right? Yeah. Stacks works one layer up from that, is you bid Bitcoin to win STX. And then all of that Bitcoin that's been bid by miners gets rolled up and distributed out to people who stack STX, or in this case, who stack STX and Bitcoin together. And so it's, there's no lending, there's no counterparty risk going on there. The economically valuable transaction that is generating that Bitcoin that becomes part of it is securing the Stacks network, so that which allows users to use it, which means miners want to mine on the network, and they bid the Bitcoin to do so. So it partly comes out of, in effect, inflation on the Stacks network, right? Because there are new STX being generated all the time, and that goes to miners. The miners bid the Bitcoin. So you don't have to have lending, but you do have to have economically valuable transactions going on. And that is, I think, the thing that a lot of people in crypto do miss, is that they don't ask that question of fundamentally, and you'll hear people say the things of if you're not paying, you are the product, right? Or there's a similar thing. If you don't know where the yield's coming from, you are the yield. And that's absolutely true. If you don't know what the economically valuable transaction is, you're the economically valuable transaction to someone.
Okay. So how can people learn more about Stacks? And obviously
stacks.co, check it out. You can follow me on Twitter, Alex L. Miller. Shoot me a DM if you got any questions. And like I said, our goal in life is just to build the Bitcoin economy. I think there's a very funny thing where the US dollar is already, for many people around the world, has been for decades, the equivalent of how we talk about Bitcoin for the future, right? It is the hedge against a shit government run system and things. One of the great joys I have is the fact that the first thing in crypto to ever find product market fit was stablecoins. But it makes sense because, again, the dollar's already been playing that role. A stablecoin is just a better way of doing that. I think you fast forward this out 5, 10, 15 years, you see Bitcoin gradually take place, especially if we're just going to have a bunch of cronyism in the US and rapid changing of financial policy all the time based on the whims of the president.
I think that's a great place to end it. So everybody, Obviously, give Alex a follow, check out Stacks, and we will be back tomorrow for the Friday 5. And hopefully we'll start on time tomorrow. It was my fault this morning. Sorry, guys.
Thanks, Dave.
Take care.
Today's video is sponsored by Rain Protocol, a decentralized platform for prediction markets where you can wager on future events without a central authority. It's built on Arbitrum and supports markets for everything from major global news to niche topics. The platform uses an automated market maker to dynamically adjust prices and maintain liquidity as participants place wagers, ensuring markets remain balanced and active. Anyone can create a market with a minimum of $10 in liquidity, choosing between public markets open to everyone or private ones that require a code to access. A standout feature is the resolution process. Public markets can be settled by Delphi, an AI oracle that draws consensus from multiple data sources for impartial decisions, or by the market creator. If a participant disputes the result, they post collateral, 0.1% of the market volume or up to $1,000, and the case escalates to human oracles for final review. Whether you're forecasting events, hedging risk, or creating incentives for specific outcomes, Rain offers transparent fees, no refunds on wagers, and a Rain government's token with a buyback and burn mechanism tied to trading volume. Visit their site or click the link right below to explore Rain Protocol.